If someone has never bought a home before and they're thinking about doing it this year, where do they even start?
If someone's thinking about buying a home this year, it starts with one conversation. Not a search, not a Zillow scroll. One conversation with a lender who can tell them exactly where they stand and exactly what it takes to get from here to the keys in hand. Everything else is noise until that conversation happens.
The market has felt really difficult for first-time buyers the last few years. Is it actually possible to buy right now, or is this still a tough time?
Yeah, that's a great question. It's a more nuanced picture than most people think. Yes, rates are higher than they were a few years ago. Yes, inventory in some markets is still tight. Those conditions are real, but here's what's also true. Sellers in many markets are open to more concessions than they've been in years. There are down payment assistance programs right now that most buyers don't know exist. And buyers who are pre-approved and ready to move are in a fundamentally stronger position than buyers who are watching from the sidelines. The first-time homebuyers who wait for the perfect conditions often find the perfect conditions never quite arrive. The ones who get educated, get pre-approved, and get strategic, those are the ones who close.
What's the single biggest misconception first-time buyers carry into this process?
I think their single biggest misconception is that they need more than they actually do. It could be more money, more time, more perfect credit, more of everything. And I see it constantly. A buyer who would qualify right now has been telling themselves for 2 years that they're not ready. They think they need 20% down. They don't. Most first-time homebuyer programs allow 3 to 5% down, and some go to zero. They think their credit needs to be perfect. It doesn't. FHA loans go down to 500, and there are conventional loan programs at 620. The gap between what people think they need and what they actually need is often years of their life. That's the most expensive misconception in this process. Not the rate, not the price, not the market, the story they told themselves about not being ready.
Walk us through the actual process. What does the path from zero to closing actually look like, step by step?
The process involves 6 stages, and the first one is the most important. Stage 1 is the pre-approval conversation. This is where we look at your credit, your income, your assets, and tell you exactly what you qualify for and what your payment looks like. It takes about 20 minutes. Everything else builds on this. Stage 2 is get your finances in order. If there are credit issues, we address them. If you need to move money for a down payment, we talk through the rules for that. Stage 3 is understand your programs. First-time homebuyers have access to programs most buyers don't. Down payment assistance, lower mortgage insurance rates, specific loan options. You see, you need to know what's available before you start looking. Stage 4 is find the home. With a pre-approval in hand, you're a real buyer, and you can move when you find the right one. Stage 5 is the offer and contract. Your lender and agent work together here. Financing structure is part of the offer strategy. And then finally, stage 6 is processing and closing. Typically 21 to 30 days. You're updating documents, staying communicative, and not making any major financial changes. No new credit, no large deposits. 6 stages. The buyer who struggles are almost always the one who skips stage 1.
Give me a real example of a first-time buyer who thought they couldn't do it and did.
Okay, real life example of a first-time buyer who didn't think they can buy and did. I had a client come to me. She'd been renting for 7 years, completely convinced she wasn't ready to buy. Her credit was in the low 600s, and she had about $12,000 saved, and she assumed that wasn't enough. But when I looked at her file, the picture was different from what she expected. Her income was stable, her debt-to-income ratio was manageable, and her credit, while not perfect, was completely workable for an FHA loan. We actually spent about 90 days on 2 things: getting one collection account removed from her report, which moved her credit score up 24 points, and identifying a down payment assistance program in her county that covered $8,000 towards closing cost. She ended up purchasing a $300,000 home. Her out-of-pocket at closing was just under $9,000, less than 1 year of the rent she'd been paying. She had told herself she wasn't ready for 7 years. She was ready in 90 days once someone actually looked at her file.
What do most first-time buyers not realize until it's too late in the process?
Yeah, a lot of them realize late in the process is how much the pre-approval conversation reveals that they didn't expect. Most people come in thinking the conversation is a yes or no on whether they can buy. It's not. It's a diagnostic. It tells us what programs you qualify for, what your payment options look like at different price points, and importantly, what's in the way if you're not quite there yet. The buyers who have the smoothest experience are the ones who have this conversation 60 to 90 days before they start looking, not the day they find a house. Because 60 days out, any issue is fixable. The day you find a house, it may not be. You see, the pre-approval isn't a formality, it's the strategy session. You have to treat it that way.
What's the single most costly mistake first-time buyers make?
The single most costly mistake first-time homebuyers make is changing their financial picture after pre-approval. Every time you get pre-approved, you're excited, you start looking, and then because life keeps moving, something happens. You open a new credit card for a furniture purchase, you buy a car, you move money around for the down payment without realizing there are documentation rules. Any of these things can stall or kill a closing. You see, lenders re-verify your credit and finances before final approval. So what was true at pre-approval has still to be true at closing. The rule is simple. From pre-approval to closing, don't open up new credit, don't make large purchases, and tell your lender before you move money. That's it.
For a first-time buyer watching right now, what are the first 3 things they should do?
Yeah, the first 3 things first-time homebuyers should do is number 1, check your credit. Your actual mortgage credit, not just a consumer app score. You need to see what a lender sees. Second is gather last 2 years of tax returns, your last 2 pay stubs, and your last 2 most recent bank statements. That's the core of what a lender needs. And third, have the conversation before you fall in love with the house. One 20-minute call tells you everything you need to know about where you stand and what's next.
If someone wants to have that conversation with you, what do they do?
Yeah, if someone wants to have that conversation with me, you can start by taking the 3-minute home loan quiz on my website. There's a path specifically for first-time home buyers. I'll come back with a personal response based on your actual situation, or reach out directly. First-time home buyer conversations are some of my favorites because the path forward is almost always clearer than people expect. You're probably more ready than you think. Let's find out.